Welcome to You and Your Money. Today's episode features Holly Wanagar, Vice President and Associate Financial Advisor at WHZ Strategic Wealth Advisors.
All right. Today we're digging into emergency funds. Now, most people know you should have an emergency fund, but many people still keep their emergency money in basic savings accounts, earning almost nothing in interest. So what's changed that makes this a topic worth revisiting?
Right. It's simply interest rates. And we've seen this over the last 12, 18 months that the rates have been high, which aren't generally great when you're looking to borrow. However, they can be really valuable for some of your cash. If we think about an emergency fund, remember, should be about 3 to 6 months of expenses on hand in, like you mentioned, a savings account. But what can we do with that to maybe take advantage of some of these interest rates, and looking at it in relation to your bigger financial picture?
So again, what should people be looking for in an emergency fund investment? I assume it's not just about getting the highest return possible.
Correct. It is, if we think of three things, it's one, safety. You want to put it somewhere where the principal isn't going to be at risk to some of this volatility that we recently talked about, and liquidity, quick access to it. In case of an emergency, we would need to access that quickly. And then third, return. And in that order, safety first, liquidity second, and then try to get the most out of the return.
So what are some of the better options available right now to invest your emergency fund?
Yeah, there's a few options to consider. So a high yield savings account, which is a little different than the bank savings that you mentioned, that's earning like 0.01%. And they can be offering, depending on the company you go with, they can be offering anywhere between 3 to 5% right now. They're FDIC insured up to $250,000. And you can usually access them easily online. The one downside with those is there may be transaction limits on a monthly basis. So you'd want to check on that. And then there's also a money market of mutual funds. That's another option that can sometimes offer higher yields than a traditional savings or a high yield savings, and they're professionally managed. So a little bit more stable. The one thing to consider there is they may have minimum investment requirements, and the yields would fluctuate with the Fed if the Fed were to reduce rates, and they're FDIC insured.
And then keep going with that. Some more creative approaches. What about Treasury One bonds? Tell me about that. Does that make sense?
Yeah. That's also an option. It's gained a lot of popularity over the last few years. And they can be great because they have some inflation protection. They're government-backed securities, and there are some tax advantages on both the Fed and the state side. However, you want to consider that there's a $10,000 minimum purchase limit. Sometimes they're not as easily accessible. Like we mentioned in the three factors in the beginning, you want to be able to get at that access quickly if you need it. And there may be some penalties if you were to pull out of that in a shorter period of time. So things to consider there. If you wanted to use an I bond, maybe a portion of your emergency fund would go in that bucket, but not all of it.
What about CDs? All of a sudden, CDs are in again.
Again, interest rates are up. So CDs are actually showing a favorable yield. And again, similar to the I bonds, CDs aren't as liquid. You can get at them quickly, but you would likely pay a penalty and lose some of your interest. So if you think of your emergency fund, how much of it could you put into CDs? You likely wouldn't put all of it into CDs. And maybe you can ladder them so that they mature at different points of time so that you could access them if an emergency or something came up.
So back to the stock market, it's performing well. You just told us that we're doing pretty good. Why not just invest in the stock for the best returns in the stock market?
Great question. And get that a lot. Yeah. I want my money to grow for me. Mm-hmm. And you see the stock market's doing great. And then there's also been times of volatility. If you look over the last few years, the S&P 500 has grown significantly, about 50%. So, but what has happened over that same period of time? It has dipped. Let's look at in March 2020 when COVID hit. Mm-hmm. Within a couple of months, it plunged about 30%. That was scary times with a lot of uncertainty. And in those times of economic uncertainty or strife is when we usually need to access our emergency funds.
Exactly.
So if we had them invested and we didn't have a good cash bucket in the emergency fund, then we may be forced to sell at a low point, which we don't want to do. We want to buy low and sell high. So that's why bucketizing where you're investing and keeping a good emergency fund so that what does stay invested can ride out those waves, both the good and the bad, over the long term.
So what's your recommendation for structuring an emergency fund now in 2025?
So we can take a tiered approach there. If we think about, again, it should be about 3 to 6 months of expenses on hand. And you can tier that. So the more near term, 1 to 2 months, you could keep in something very safe, should always be safe and liquid and easily accessible. If you looked at more of the 2 to 3 month range, you could do something like a CD and have the maturities align to having access to them. And then when they mature, look at renewing those. And then in maybe the more longer term, 3 to 6 month range, you could do something like an I-bond that has a little bit more of a long-term approach and maximizing that yield.
All right. So implementation, how do we do it?
First, so a couple things. First, open up a separate account. I like the bucket strategy. So create a separate account for your emergency fund, and then set up automated savings to have things go automatically. Pay yourself first. Tends to be easy and keeps us on track. And also continue to review this. So the third would be check in on it at least quarterly, because the Fed continues to talk about adjusting rates, and that may be a factor that would drive you to make some adjustments there. And I'll give you a bonus tip. If you have an HSA through your employer-sponsored plan, save there, because that can be a great strategy to use in case of a health emergency and is very tax efficient and can grow for you over time.
For more information regarding wealth management and customized financial planning with WHZ Strategic Wealth Advisors, please visit WHZwealth.com. WHZ Strategic Wealth Advisors offer securities and advisory services through Commonwealth Financial Network, member FINRA SIPC, a registered investment advisor. Fixed insurance products and services offered through CES Insurance Agency. They practice at 697 Pomfret Street, Pomfret Center, Connecticut 06259, and 392A Merrow Road, Tolland, Connecticut 06084. They can be reached at 860-928-2341. WHZ Strategic Wealth Advisors do not provide legal or tax advice. The tenured financial services team strives to support clients in achieving their financial life goals while providing absolute confidence and unwavering partnership for life.